Hello everyone and welcome back to my YouTube channel. So today we will be solving a limited companies questions from October-November 2020 variant 33. So this is the question number 4 of October-November 2020 variant 33. So let's start. The books of account of P Limited contain the following summarized ledger accounts for the year ended 31st March 2020. So they have given these summarized ledger accounts. Answer the following questions in the question paper. Questions are printed here for reference only. Prepare the schedule of non-current assets for the year ended 31st March in accordance with the provision of IAS 16 suitable for inclusion in the notes to the account. So we need to prepare a schedule of non-current assets. So let's start. So first thing we need to do is that you have to make this column as per the requirement: premises, plant and machinery, motor vehicles, and total. So the first thing they have given to us, let's see. First of all, we will write the cost. You need to remember the format and the layout of this. So first come the cost of it. That is the balance BD of each of the cost account. The premises 900,000. So it would be written as cost 1 upon 4 means 1 for 2019. That was how much? 900,000. 900,000. For plant and machinery, it was 405,000. And for motor vehicle, it is 198,000. 405,000. And for motor vehicle it is 198,000. So let's total it. It gives us a value of 1503,000. 1503,000. Okay, we are done with the cost. Now comes the additions into it. So what are actually additions? The bank given. For example, in plant and machinery it is given 117,000. For motor vehicle 76,000. It is actually what we earn from that non-current asset is recorded as additions. So bank 117,000 given in plant and machinery on the debit side, 76,000 on the motor vehicle side, and for premises we have nothing for premises, so only for plant and machinery and motor vehicles. Let's write it. It would be recorded as additions. 117,000 and 76,000. So 76,000. The total for it would be 193,000. Okay. Now will come the disposals. Okay, so we have disposal for plant and machinery and motor vehicles. Okay. So here we need to do little bit of the calculations. Yes. Okay. It is given disposal. Okay. So we will write directly the total of the disposal. So we have to calculate it. For provision of depreciation of motor vehicle, the disposal is given. We do not have to look for these accounts that are given of disposal. Rather, we will look in the depreciation account for disposal as we are calculating the cost of it. So on the depreciation of plant and machinery account, disposal has been given 46,000. So let me do the calculation here. Disposal. We will write directly the total. I'm saying again. You can show the calculation here. 46,000 plus no, sorry. It will be 92,000. Yes, the cost we are doing for cost. 92,000. And for motor vehicle, how much it was? 44,000, yes. Plus 44,000. So let's check how much it is. Yeah, so it gives us a value of 136,000 that would be recorded in the total of it. 136,000 disposal has been calculated. Now we will calculate the final cost of it, that is at 31st March 2020. Okay, wait 1 minute. 31st March 2020. Okay, so you have to show it with a double line that you have calculating the final cost. For premises it would remain same, 900,000. For plant and machinery it would be 405,000 plus 117,000, which gives us the value of 430,000. No wait, 405,000 plus 117,000. 405,000 plus so it gives us the value. Wait, I'm minusing it. Why? 522,000 is the value. For motor vehicle will be 230,000, and the final total will be 1560000. So we have finally calculated the cost of it. Now we will move towards the depreciation. Depreciation. Okay, so let's go and see the first opening values for each of the depreciation charged. Okay, so for provision for depreciation premises, we have 72,000. For plant and machinery, we have 184,000. I'm looking at the credit balances of each of the depreciation account, which will be recorded as the opening of it. And 103,000 for motor vehicles. So let's write it. Depreciation at 31st April 2019. 31st April 2019. $72,000. 184,000. 103,000. 103,000. And 359,000. The total. Okay, so right now we have written the cost. Now we will go for if they have given us any charges. Okay, you have to remember that for the charges you have to look at the income statement. Whatever is charged to the income statement, we will charge it to the schedule of non-current asset. Okay, so for provision for depreciation premises, they have charged 18,000 on the credit side, as you can see. For plant and machinery 107, and for motor vehicle 46,000. Okay, let's write it. This will be recorded as a charge for the year. Charge for year 18,000, 107,000, 46,000. Now we will calculate the total for it. 171,000. So we have calculated the charge per year. Are there any disposals eliminated? Disposal. Okay. Provision for depreciation. Yeah. So for disposal, there are eliminations. So on each of the depreciation account, whatever the disposal is written in the debit side, actually it is eliminated. Means cancelled off with the depreciation. So for plant and machinery 46 and for motor vehicle 35. Disposal eliminated. So we will add 46,000 plus 35,000. That gives us a value of 81,000. Okay, again, how I calculated the disposal eliminated. The disposal on the debit side of each of the depreciation account will be recorded and added, which will be recorded as an elimination and will be subtracted from the cost. Depreciation. So now we will calculate the totals for it also, which okay, 72,000 plus 18,000 give us now 90,000. This is 107,000 plus 184,000. That is 2450,000. 103,000 plus 46,000. This 149,000. 245,000. 484,000. Okay. Net book value now. That's the final thing. So for 900,000, yeah, so net book value will be calculated as 810,000, 185,000, 116,000, and 111 will be the total. So the final value will be first for 2019 28,000, 221,000, 95,000, 114,000. Okay, so we are done with the first part of the question, that is the schedule of non-current assets. There may be, if there is any mistake, you may see, but I don't think so there's any mistake. Let's go for part B. Okay. Part B says, identify the total figures from the summarized ledger account which should appear in the statement of cash flow for the year ended 31st March. State the section of statement of cash flow in which each figure would be recorded. Use the table below for your answer. Okay, so first of all, we need to go for the total ledger accounts and see. Okay, you identify the total figures from the summarized ledger account which would appear in the statement of cash flow. So first of all, we need to see the total ledgers account. Yes. The depreciation charge would be recorded as 171,000. And it is recorded in the operating activities. And it is recorded in the operating activities because it does not have any link with the financial activity, as depreciation is charged on the non-current asset, so it is rather recorded in the operations. Then comes loss on disposal. That is 290,000. I'm not showing you the values because you can see it from the answers, or else it will be very time taking. Loss on disposal, profit on disposal is 10,000. That is also recorded in the operating activities. Now comes the proceed from the sale of non-current assets. That is how much? Proceed is 36,000. Okay. Proceeds, sale, non-current assets, 36,000. It is recorded in the investing